Welcome back to Empowered. I'm Elizabeth Naumovski. Unfair taxation of solo seniors is our topic today. So, Elizabeth, let's get right into this. Do you have any specific examples of the impact of your concerns?
Yes. Why don't we show a case one of a scenario that we mocked up just to explain the situation. So what we wanted to do basically is to compare the taxation of a senior couple at 50,000 in income with a single senior at 50,000 in income. So you can see there's the two columns there on the left. That's our spouse one and spouse two. That's our couple, and then of course the person in the last column is our single. And so if you look and you see, so for example, in our example, everyone is getting old age security, everyone's getting CPP. Now, the one thing that we already see with the difference with the couple is that they can split pension earnings. And so they, for example, have $16,000 of pension earnings that they're going to split. And so then then the single person, of course, has additional pension earnings that they cannot split. So right off the bat, the senior couple is going to have an added advantage. And so there's the other concern that we have is not only pension income splitting, but there's specific tax credits that that each senior can claim. So there's things like a personal amount, pension amount, and an age amount. With the couple, each member of that couple can claim those three credits. So the couple can claim a total of 6 credits on that 50,000 in income, whereas a single person, of course, can only claim 3 credits. And not only that, but things like the age amount and the pension amount, if one member of a couple doesn't use up all their credits, they can pass them over to the remaining spouse so that you get the couple who can really take a lot of advantage of tax credits. So basically, by the time, we work through the income splitting and the additional credits, we find that on 50,000, a couple might pay $600 in tax, where a single person might pay approximately 5,700
And
in
that's a
tax.
huge, huge difference.
That is a huge difference, and that's using 2024 numbers. We just modified these numbers. And so, again, coming back to that, when you think about the fact that seniors' expenses, a single senior's expenses really aren't that much, different than a spouse, than a couple. And not only that, everyone's going to be focused on their health care because of increases in life expectancy. Everybody has maybe elderly parents or children or
Mhm.
grandchildren they're looking after. That can make quite a difference. And so I think what we really, need to do is we really need to start asking, why is there that difference? And does this difference really make sense when you look at seniors' needs in 2025?
Okay, so I think you had another case that you wanted to discuss as well.
Yes. And so if we look at the disparities slide, so basically what we've done there is we run through the taxation at different levels of income. So if we look at 30 and 40,000, couple may pay no tax on that at 30,000. A single person may pay roughly $1,200 in tax. At 40,000, a single person may pay $3,500 in tax. We've already talked about the 50. At 70,000, a couple may pay approximately 4,600 in tax. A single person may pay roughly 12,000. So that's a difference of about 7,000. And then looking at 100,000, a couple may pay roughly 11,000 in tax, whereas a single may pay roughly 22,000. So that's almost twice. So that column here is all of the extra taxation that a single person could pay. And because we can income split, we actually start to lose things like our access to the age amount tax credit. And at 100,000, the single person starting to get a clawback of the old age security when a couple does not, because again, they're allowed to split their income and they each can drop below the clawback level for for old age security. So I think this again really highlights the disparities in those blocks that are colored. We needed to give an example of, we were asked to provide an example of how much more a couple could earn before they're paying the same taxes as a single. So at 70,000, a single person might pay $11,000 in tax. A couple could earn an additional 30,000 to get to 100,000 before they're paying roughly the same tax as a single person. So again, roughly 11,000, 12,000 there. So
So,
that we just want to show there's a wide range of issues with taxation here.
and I love the fact that you did put together those slides because they actually, to me, I'm very visual. and tactile. So when I see it, it actually resonates with me. And I know that this will resonate with a lot of people as well. When we come back from our commercial break, I want to talk to you about specific concerns from women who've contacted you because this is important as well. So please don't go away.